Now guys, I'm going to discuss the agenda of this S&P 500 weekly technical analysis that is applicable from November 20th, which is Monday, to November 24th, that will be Friday. Now guys, let me clear one more thing, that the short term outlook may be bullish, may be bearish. However, the long term outlook is bearish. Long term, when I say, I mean, so the long term outlook means maybe 6 months, 1 year, or just over 1 year. Okay, this is the long term outlook that is bearish. I will explain in detail through the numbers and the data that why the long term outlook is bearish, whereas the short term outlook may be bullish, may be bearish. So the first point of the agenda is the S&P 500 technical analysis on the weekly chart. As such, there is nothing new on the weekly chart of S&P 500. However, Dow Jones, there is the important thing that has happened in case of the Dow Jones, that is the crossover in the moving averages on the weekly chart. So I will show you, okay, that how it has happened and what will and how this is going to impact the further or this the movement of the entire US stock market. Second point of the agenda is the S&P 500 technical analysis on the daily chart. So daily chart, you can see that clearly it is bullish, absolute bullish, heavily bullish, as well as saturated or heavily saturated. If you notice that in last 3 days, that was Wednesday, Thursday, Friday, there was very limited movement, very little movement. And because it is heavily saturated, that is the technical reason why it is unable to give a very heavy or very good upward movement. Yesterday we have seen on Friday, we have seen that the movement was the entire day for the movement was in between 4500 and 4521. And you'll be surprised to know that yesterday in my these updates to my Patreon community members, I've cleared one thing. This was very specific. 4500 S&P 500 will not go down, it will not fall until and unless there comes a movement below 4500, or the S&P 500 drops below 4500, or gives a sustained movement below 4500. This means that the downward movement will be limited to 4500. And if you notice that the yesterday the low was 4499.66, means 4500, right? Whereas the upward movement was supposed to be limited to 4527, 2737. This is the zone that I am going to explain in this S&P 500 weekly technical analysis. This means that the entire day S&P 500 will trade between 4500 and 452737 zone. Now the third point of the agenda is the probable movement of the S&P 500 from November 20th, which is Monday, until November 24th, that will be Friday. Whatever is going to happen, that if it try to move up, then to what level it can move up, from where we can see a reversal. If it comes down, then to what levels it can come down, and then when we are expecting this, the bullish reversal. Okay, this is the kind of movement. Each and everything I am going to explain in the third point of the agenda. And guys, I would like to add a disclaimer to this S&P 500 weekly technical analysis, that this S&P 500 weekly technical analysis is not a financial advice or an advice to trade in the stock market in any form or in any manner. So guys, I'm going to begin with the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. So before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also, if you want to get these are daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first point of the agenda of the S&P 500 weekly technical analysis, and this is the weekly chart. Let me write it down. Weekly chart. Weekly chart means one candle represents 1 week. As we know that it was coming down, and the moving averages were about to give a crossover, a bearish crossover that would have triggered a long-term bearish trend. Okay, but exactly at the same time, exactly at that the moment, we have seen a heavy reversal, and it was heavily manipulated. And because of only and only because of this heavily manipulated, this a bullish movement, 6% in 1 week. These are moving averages which were supposed to give a crossover to drive the S&P 500 into the long-term bearish trend. Now they have simply changed, and now because of the formation of the slip, this is bullish. Now what actually I wanted to show you was If you notice, there was a bearish crossover in the Dow Jones, okay, and then the Dow Jones was going bearish. Again, the same, this is the same candle, a single extremely heavy candle we have not seen in last many months, okay. So this single candle has forced these the moving averages to change, and then another week, and now another week, and now we have seen a crossover in the moving averages in the bull side, okay. Now because of the crossover in the moving averages in the bull side, all of the technicals, I think all of the technicals except the MACD is at the junction, okay, same, all of the technicals have aligned bullish. Other than that, if we look into the weekly chart of the S&P 500, clearly again the same problem is with the MACD is still trading bearish, okay. Otherwise all of the technicals have aligned bullish. Other than that, the saturation, I will not say that there is any saturation on the weekly chart. There is no saturation on the weekly chart, okay. The saturation is there on the daily chart. Yes, there is one more thing about this, the candle, the last candle that was formed here, S&P 500 and the Dow Jones. So the candle is very heavy, okay, and it is heavily bullish. In general, it should give the bullish sentiments to the entire US stock market, okay. However, because of the saturation or the heavy saturation on the daily chart, the bullish sentiments whatever will be, okay, see, first of all, I'm not confirming any gap up open because that condition is not there, the gap up open, okay. I'm simply saying that whatever will be the bullish sentiments next week, especially on Monday, these bullish sentiments may help the S&P 500 and the Dow Jones only if these indices try to come down. However, if these the indices hold, okay, around the current levels or can try to move up a little, then the bullish sentiments, then their role, okay, it is over. This is the obligation, okay, whatever it is, not the, I will not say obligation, so just the role, okay. I'm not saying that the bullish sentiments are so heavy they will be able to hold the S&P 500 again, no, okay, because the S&P 500 has already disrespected, okay, 1 2 3 critical levels, and now the fourth one is there in the picture. So this will not happen as such because historically it has never happened, okay. And I think one time it happened, but again we have seen a extremely heavy reversal in the entire US stock market, and once the obligations were fulfilled, then it regained it. And so see, this is how the stock market works, okay. So overall, we can say that on the weekly chart of the S&P 500, S&P 500 is you can say like 80% bullish. Okay. Similarly, the Dow Jones is also 80% bullish. Once the MACD goes bullish, once there comes a be a bullish crossover in the MACD, in that case, all of the technicals will be aligned bullish, and in that case, we will say that it is 100% absolute bullish on the weekly chart. Okay, so as of now, it is 80% bullish on the weekly chart. Now guys, the second point of the agenda is the S&P 500 technical analysis on the daily chart. But before that, I would like to add one more point in this agenda. Let's say that is the second point of the agenda, and that is regarding the long term outlook and the short term outlook, okay. Based on the numbers, facts, okay, and these things, short term may be bullish, may be bearish, okay. Why I'm not saying that it will be 100% confirm bullish? Because as of now, the geopolitical conditions, okay, and the conditions, okay, in this particularly with the banks, okay, banks interest rates, federal funds rate, okay, and all of these things, they're not supporting any sustained bullish movement, okay. However, I'm not denying the fact that the S&P 500 cannot move up further. It can, okay, it can, but what I'm trying to say is that it cannot simply move up and up, okay. So yes, if you remember, or if you have watched my previous I think the last week, October last week, that the weekly technical analysis, okay, when I was discussing about this, the reversal, so that time this was the movement, it was, and it was supposed to be like this, okay. However, I have mentioned this thing very clearly. Before we see the correction, not correction but the recession, okay, there will be an upward movement, there will be a bullish movement, a good bullish movement or a heavy bullish movement, it will depend, but there will be a bullish movement no matter what. Yes, to be honest, I wasn't expecting this bullish movement to happen in the month of November. I was expecting it to happen in the month of December, what we call as the Santa rally, December or January. Okay, that was the time when I was expecting this kind of bullish movement. So the bullish movement was there, 100% confirmed. It was there that it will happen. Bullish movement will come no matter what. Okay. However, the timing was the issue, that when exactly it is going to happen. I've given you this the date November 6th. However, it happened a little early. Okay, here 2 days fine, but I think on November 2nd, November 2nd, okay, it is started to happen. Okay, so November 6th, I've given this date in the month of September, that whatever will be the trend, this trend will be reversed. However, I will try to improve my technical analysis so that in future I can give you the exact day and date when, okay, these events are going to happen. Yes, the short term and the long term. So short term it may happen, and the short term will depend actually, okay, how saturated it is. Currently it is saturated, it will come down, cool down. If it sustains here, then again a bullish reversal. Okay, not a problem. This will be the natural movement. Okay, although it was manipulated, but now it has come into this particular condition where we can say that it has sustained and it can come down and it can give a bullish reversal. Okay, it can further move up, right? But if you think that no, it is going to move up, so that technically is because technically it has defined technicals a many a times, not just technicals but the levels. So there are a lot of these obligations which are still pending. Okay, and so obligation means 4291. Okay, this is the biggest obligation, 4291 and 4300. Biggest obligation is there in the picture. Okay, other than recently, okay, we have seen that it has given a good gap up open, okay, here. Before that it was giving just a gap up these open, so many other things. Anyway, let's talk about the long term outlook, that why I am saying that the long term outlook is it is bearish. Okay, and when I say long term outlook, this means 6 months to 1 year outlook. Okay, or the end of 2024. This is bearish, heavily bearish, not just bearish but heavily bearish. Okay. The problem is with the banks, the financial sector, the financial system. Because as of now, the financial system, the financial sector, the banks, again, the problem is banks. Whenever something bad happens, then the banks are involved. Okay. Whenever there comes recession, okay, or whatever comes, it is because of the bank. As of now, the debt. Okay. And this debt is not a problem for the US only. This debt is a problem, particularly you can say, for all of these economies. Recently, we have seen some of these Asian economies have, tightened these policies. Their central banks have issued the guidelines, okay, to the banks, that you must exercise caution in disbursing the loans, personal loans or credit card, okay, and you must check and you must keep a constant check, because now the debt is increasing. After COVID-19, we have seen that money, okay, it came into the market, and now some reason, so the debt is increasing. Debt is increasing, and debt is at the all time high level, okay, in the history of the world. Okay, and yes, US is, so particularly the US economy is highly, okay, prone to this, okay, whatever happened to this debt, okay, if there comes a fall or if there comes any debt crisis, then US economy, okay, it will be severely impacted, okay, as compared to the European and the Asian economies. Okay. This means that the current financial situation, okay, is very bad. However, the economy is sustaining, economy is surviving. All of the global economy is not just sustaining, but it is booming. Looks like that it is, everything is on the boom. Stock market is moving up for no reason, for no good reason. People are buying the things. Means a lot of things are happening, and that is exactly this the problem. The economy and everything can still sustain, not a problem. But the problem is the Feds, the Federal Reserve, particularly the US Central Bank, the Federal Reserve. They are keeping the interest rates on these the decades, okay, high level, like, okay, this is 525 to 550, okay, BPS, in this the target range. Okay, high interest rates, okay, and there's a boom in the economy. It is not permitted, it cannot happen technically, logically, okay, or through any method. Okay, this cannot happen. High interest rate means that the economy, okay, and the economic condition, this must reverse. Okay, so the debt and all of these, then the high interest rate. So that is why the long term outlook is still bearish, because the Feds, the Federal Reserve, okay, chairman and the FOMC members have said, okay, they have confirmed that even if there comes, any rate cut, then also these rate cuts will be very nominal by the end of 2024, December 2024, and high interest rates, okay, or prolonged high interest rates means this can trigger a recession. If not the recession, then a correction or a good correction. This is when the S&P 500 entered into the correction, and it was supposed to come down, okay, but then the dovish comments of the Federal Reserve chairman and everything changed, okay, and the outlook will change only the day when the Feds go for the rate cuts. Otherwise this outlook will not change and long term outlook will remain bearish, okay. And short term, yes, up down, that can happen, okay. It will be like every day, every other day, or every week, okay, it will keep on changing. So, but whatever happens, okay, just make sure that you know the technicals, you follow the technicals, okay, just the market movement and all. And for those who do not know the technicals, they can participate in my stock market knowledge transfer program, or you can learn about the technicals through any channel or through any program. Okay. However, in my stock market knowledge transfer program, okay, I teach everything: the movement, hacks, strategies, trend analysis, manipulation, technicals, predictions, even before the things happen, support and resistance levels, and much more. And one more thing, okay, and this is the spreadsheet where everything is mentioned in very very detail, okay, the basics, and then my modified, these are technical indicators, trading strategies, market analysis, options trading, live options calculations, okay, and support and resistance levels, my own calculated support and resistance levels, price prediction before the things happen, deduce the trend of the stock market. And one more thing, that I'm offering flat 20% discount on these two levels, level 2 and level 3, flat 20% discount. That is again applicable, or this offer is applicable until November 30th, which is Thursday, okay. And this is my email address. So whenever you want to participate in this the program, you can simply drop me an email. Now guys, I am going to discuss the next point of the agenda of this S&P 500 technical analysis, and here I will do the S&P 500 technical analysis on the daily chart. So let me write it down, D as in daily chart. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community in order to get these daily updates, a daily analysis of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. You can join my Patreon community. So guys, if you look into these technicals, all of the technicals, okay, are bullish, 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 and here also, okay, all of the technicals are bullish, 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 okay. So looks like that everything is bullish. Yes, everything is bullish, 100% absolute bullish. Then if everything is bullish or absolute bullish, then what's the problem? The problem is the saturation, okay. If you look into the stochastic RSI, absolutely saturated, okay. Now heavily saturation in a manner that okay, let me show you. And this is very very rare, very rare, okay. Here it is heavily saturated, here it was heavily saturated, okay. On this day it came down, okay. It was destined to come down even without the comments of the Federal Reserve chairman, okay. It was supposed to come down, okay. So this was nothing new. But here, where is the red candle? The red candle, or the good or red or heavy red candle, is missing, okay. So we need these heavy red candles, not just one candle, okay. Just like this was only one candle, no, we need back to back some good red candles so that it can properly, the S&P 500 and the Dow Jones can properly cool down. Once it cools down and sustains, then it can resume its this the bullish movement. In that case, we can buy, okay, at these levels, okay. Some of these are levels, okay. So that is there in the picture. And other than that, okay, I do not see any problem, okay, with these indices, but the saturation or the heavy saturation. And this kind of scenario, one heavy saturation to, okay, the second heavy saturation after 2-3 days, this is very rare. So this kind of movement, okay, it generally doesn't happen, okay, until and unless there is, like, either there is a long term bullish trend, okay, for 2, 3, 4, 5 years there is a long term bullish trend, okay. But even in those cases also, uh, the time between the two saturation, okay, two saturated movement, this time, okay, this time is in like minimum 2 weeks. However, here looks like that the stock market is in hurry. Okay, it just want to achieve something quickly, or as if everything is going to come down heavily. So I don't know exactly why they are pushing it, okay, in this manner, where the dovish comments of the Federal Reserve Chairman are accepted, but the hawkish comments of the same Federal Reserve Chairman are not accepted. Okay, and the data that is supportive to the stock market is accepted. The data which is not supportive to the stock market is not accepted. But the good thing is that whatever happens, okay, this the minute, okay, or the heavy, okay, movement, whatever it is, okay, I inform my Patreon community members very well in advance so that they can trade accordingly. And it was not just about this particular day like Friday. No, it was like every day. Okay, every day we knew that where it can come down, to what levels it can come down, to what levels it can move up, what are the conditions for the fall, what are the conditions for the bullish movement, what are the bullish limitations, what are the bearish limitations. And it's not just about these the daily updates, the daily analysis that I give to my Patreon community members. However, it is also about the stock market opportunity. So along with the daily analysis, the daily updates, I also give these the stock market opportunities to my Patreon community members in the premium stocks of the US stock market. And if you also want to join my Patreon community, then let me tell you that how you can join my Patreon community. So in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. When you follow that link, then you will see that this is my Patreon page, this is my Patreon profile, and here you will see that there are two tiers: daily S&P 500 updates and daily S&P 500 updates. The only difference between these two tiers is the geographical location. The daily S&P 500 analysis and updates is for non-US and Canada residents. The daily S&P 500 analysis and updates is for US and Canada residents only. So when you subscribe to either of these, then you will get the daily S&P 500 updates, analysis, and the probable movement from Monday through Friday each and every day, and also the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10 every week. And guys, if you notice that many people have joined my Patreon community for last many days, weeks, months, or more than a year, and they are getting these daily updates, a daily analysis of the S&P 500 from Monday through Friday, each and everything, as well as the stock market opportunities in the premium stocks. So whenever you want to join my Patreon community, you are welcome, and the link is there in the description of this video and also in the comment section. Now guys, I'm going to discuss the last point of the agenda of this S&P 500 weekly technical analysis. And here I will discuss the probable movement of the S&P 500 from November 20th until November 24th. So a few things. Number one, on Tuesday, that will be November 21st, the FOMC minutes of the meetings, okay, this will be published, this will be released, and we will come to know about the projections, what the committee members were thinking, all of these are things. This means that if there comes a very limited movement on Monday, again, red green doesn't matter, if there comes a very limited movement on Monday, then on Tuesday we can expect, or we can anticipate, a good or a heavy movement. Or you can simply think of it like, okay, whatever has happened on Monday, that was November 13th. Okay, so on this day also, okay, I have told you, means to my Patreon community members, that see, there is a very limited movement on Monday. This means that on Tuesday, the CPI data will be published, and now we can anticipate a very good, very heavy movement in either side as per the CPI data, okay, on Tuesday. Similarly, okay, here also the same thing. Tuesday FOMC. Then the second point is, I think that is November 23rd. That is, yes, November 23rd. That is Thanksgiving. Thanksgiving, it will be the holiday. Okay. So and then on November 24th, it will be just half day. Okay, I think up to 1 p.m. The trading will be allowed only until 1 p.m. Eastern time. Okay, on Friday. That will be November 24th. 23rd is holiday, 24th, okay, 1 p.m. And so effectively Monday, Tuesday, Wednesday are the 3 days to trade. That's it. And in these Monday, Tuesday, Wednesday, Tuesday, the FOMC data. Anyway, so if you are my Patreon community member, so once the data is published, okay, I will give my interpretation. So I will interpret the data and I will inform you, okay, what exactly is the meaning of the statements and whatever, and where exactly the market will be heading to. So technically, a few things that you must understand. Number one, heavily saturated, no doubt. Okay, back to back, heavily saturated. Okay, as if the stock market is in very extremely hurry. Okay, generally this doesn't happen. This means that if there comes just one more bullish candle, even though a very limited or very little bullish candle on Monday, it will add more weight in the saturation. One more thing, as of now, because it is heavily saturated, which is why okay, I cannot confirm whether there will be a gap down open or a gap up open. Okay, all the people might think that there should come a gap up open. Yes, you are right. But because of the heavy saturation, a gap down open can also happen. Okay, and a sudden fall can also happen because as of now, the S&P 500 is in a condition wherein it can give a sudden fall, a sudden or a heavy fall. Okay, in order to come out of this saturation, right? So anyways, this will be much more clear, okay, on Monday. So even in the pre-market, okay, I can confirm, okay, what we are anticipating. So in my pre-market update on Monday, okay, I will clear this thing to my Patreon community members. Now, so question is that if the S&P 500 wants to move up, or if it try to move up, then where it is heading to, or where it will be heading to. If you remember, okay, there is a zone. Okay, this is my calculated resistance zone 4527 4537. Okay, this is my calculated resistance zone. Yesterday and day before yesterday, okay, day before, okay, that my Wednesday, Tuesday, for last, okay, every day, okay, we knew this thing 452737. Now because the S&P 500, okay, it actually there was all of these the unnecessary, okay, logical, and then some all logical together, some logical, okay, bullish movement, sentiment, bullish movement. The S&P 500 failed to hit and to breach and to clear the zone. Okay, so now there are limited chances that the S&P 500 can move up and can hit the zone. Okay, hit, breach, okay, it can happen, it can happen, but the question is that whether it will be able to close above the zone or not. If you notice on September 1st, on September 1st, S&P 500 moved up and it gave this the high, which was 4541. Okay, so it has actually breached the zone, hit the zone. So it hit the zone and it has breached the zone. But we are not concerned about, okay, whether it is going to hit or breach the zone. We are much more concerned about whether it will be able to sustain, whether it will be able to give a closing. Closing is what matters in the stock market. Closing. Okay, closing price, open price and close, and these are closing price. These two prices, open and closing, these are two very important prices. Then if you notice that on September 1st, the S&P 500 moved up to 4541, but it came down and it closed at 4515. On September 1st itself, I have predicted and I have confirmed that now no more bullish movement, rather simply the bearish movement, because it has failed. Okay, and then we have seen that from September 1st until the end of October, continuously there was this bearish movement. Okay, so now what does it mean? Okay, so this simply means that the 452737 zone is very heavy. And one more thing, it's not just about the zone, but it's also about the previous high, that is 4541. Okay, this means that now the S&P 500 has these challenges. Okay, number one, it has to tackle with, or it has to handle the absolute saturation. Absolute saturation. Okay, number two, it is trading just below the very heavy resistance zone, historically known this is zone. Okay, zone, it has to clear the zone and close above the zone. Number three, it has to clear and close above and breach and close above 4541. These three things. So the S&P 500 must fulfill these three conditions, then only we can say that yes, now it is further going to move up. However, the current condition technically, even though it was manipulated fine, but manipulation, okay, has some limits. So this the, okay, continuation of the bullish movement is not allowed, okay, as such. So this means that that S&P 500 is allowed to move up, but not like this. No, not like this. Very rare chances, very few chances. Okay, the however the S&P 500 is allowed to come down and then to move up like this. Okay, this is sustainable, this will be accepted, and this will fulfill many of the conditions, right? So this kind of movement, okay, come down and then move up. Similarly, okay, we have seen, for example, okay, it was coming down, okay, then move up, then coming down, then move up, then coming down. Okay, similarly here, okay, not in the very, okay, this is a straight line, no. So how this the bearish reversal, or to what levels this the bearish reversal can be seen? Okay, so let me show you that where we are anticipating this thing to happen, okay, or how exactly, okay, it can happen. But okay, we must not forget about this zone. Okay, well, okay, guys, once again let me remind you, this is the number that you are seeing here, 452737. Okay, this is my calculated resistance level, my calculated resistance zone. Okay, you might not find, okay, or you might not be able to see this, okay, through the standard support and resistance levels or the pivot levels. Okay, this is my calculated resistance zone, resistance level. Okay, and if you have subscribed to my YouTube channel for last many months or years, then you know that my calculated levels, okay, they are very well respected by the Dow Jones and the S&P 500. Now a fall can happen, fine, fall can happen until the open of this the candle. Okay, not exactly to this the open of the candle. Okay, there is another, this is a support level, my calculated support level. Okay, so that can happen, but more fall or more selling can happen only and only if the S&P 500 clears, breaches the open of this particular candle. Once the S&P 500 breaches the price of this, the open price of this particular candle, then only it is allowed to come down. It is then only it can come down. It can come down to get this the support at the Ichimoku cloud. However, okay, between this level and this Ichimoku cloud, there are many other very strong support levels. Okay, that I mentioned, or that I regularly mention in my these updates, okay, every day to my Patreon community members. But yes, there is this thing, okay, very much clear that no fall will be seen, no bearish reversal will be seen until and unless the S&P 500 clears the open price of this candle. Once it breaches, then only this will open the possibility of fall more fall to the Ichimoku cloud itself. Okay, and if there comes good fall, good selling, okay, in 2 days, 3 days, 4 days or so, in that case it can come down to fulfill its obligation to 4291. Okay, so it is still pending, sooner or later it will be fulfilled no matter what. Okay, but at the same time I'm not denying the fact that it will not move up. It can move up, but the point is that before it can move up, or before it can move up any further, it should come down, it should cool down, and so that it can enter into a long term sustainable bullish movement. If there comes like back to back further bullish movement, this means no, it is absolutely not sustainable, and in that case there will not be a bearish reversal, there will be a bearish trend. Bearish reversal means a short term reversal, then it will go bullish. Trend means that it will enter into the bearish trend, right? So this particular movement, whether it moves up in a straight line or it gives this kind of movement, okay, it will define a lot of things. So I hope this particular case is clear. Now there is one more thing. So this particular thing is that the condition for more bullish movement, okay, so we need minimum two. In this particular case, not two. We need minimum three. We need minimum three successive closings above the zone 452737. So when we see three consecutive back-to-back closings, I'm not talking about intraday breach or hit. No, I'm simply saying three consecutive closings above the zone 452737. When it happens, in that case we can say that yes, even though it might look, or not might look, but even though it is heavily saturated, but for some reason it is sustaining. It can come down any day, any moment, any time. That yes, that's what we know. Okay, but because it has sustained for three successive days, this means that now any fall will be limited, or will be very limited, and there are very extremely heavy chances that it will recover. Okay, although this particular condition as of now heavily saturated, three successive consecutive closings, it is like you can say like 0.1% chances that this can happen. not 1% but 0.1% chances that this can happen, okay, without giving a good bearish reversal. If it gives a good bearish reversal, fine. In that case, 3, 4, 5, 10 can happen, not a problem. But without giving a good bearish reversal, saturated, everyday saturated, heavily saturated now, 0.1% chances. Okay, so that is there. Now, one more thing you must understand that the boundaries of the Chimoku cloud themselves, okay, act as a strong support or resistance levels. Okay, we have seen it has acted as earlier a strong resistance level. Okay, this was a fake movement and absolutely what we call as the manipulated movement, absolute manipulated movement. Okay, and how it was confirmed? If you look into the second candle, it closed below the Chimoku cloud. That itself, see, although we knew on Friday that it is heavily manipulated, everyone knew that it is heavily manipulated, but technically on Monday it was confirmed 100% that it was a fake bullish movement. This was a fake bullish movement because a second candle closed below the Ichimoku cloud or inside the Ichimoku cloud. Okay, this was there. So this means that when the S&P 500 comes down, in that case, it will try to find support at the boundary of the Ichimoku cloud, this boundary and this boundary. Okay, it can even give a closing below the Ichimoku cloud, but no, we are looking for two minimum two consecutive, minimum two successive closings. Okay, this side we are looking for 3 above the zone. This side we are looking for two successive closings above or below this the Ichimoku cloud. Once that happens, it will re-enter or it will resume its bearish trend. Okay, not bearish reversal, bearish trend. Okay, however, for the next week, chances are not much that there will be any kind of bearish trend. Bearish reversal, yes, that will happen, not a problem. That will happen. You will see fall or good bearish candles. That is normal. That will happen. Okay. Now, yes, let me also tell you about these a few more things. Okay, and that is that what obligations are still pending. One is 4425. Okay, this is pending. Second one is 4 okay, simply put, okay, 4300. These two obligations, these are the two measures. This is 4291 4300. Okay, this is 4425. These are the two major obligations that are still pending. Okay, sooner or later the S&P 500 will come down to fulfill these two obligations. Other than that, people also believe that there is a gap fill theory. Okay, although that is not, there is no technical base, but if that happens, there is one gap, second gap, third gap, and I think fourth gap is there, fourth, but until third gap. This means that 4200 something. Okay, that is, if we consider this the gap fill or this thing, then yes, 4002 4230 or something. Okay, that is there, that is still pending. And yes, on Monday, particularly on Monday, we will come to know, okay, the mood of the entire US stock market for the rest of the week, because Monday the closing that will be there, green, red, and the size of the candle, particularly the levels, okay, that will further clear all of these the things. And Friday it was 4500. Okay, this level will now change on Monday. Okay, so do not think that I've given 4500 on Friday. Okay, so it will remain 4500. No, it will change. Okay, so I give these whatever the levels. Okay, these levels. Okay, so these levels keeps on changing. However, some levels, some zones, they are fixed. For example, 452737, it is fixed. Okay, so this will not change. And but whatever will be happening on the daily basis, okay, I will keep you posted through these daily updates if you're my Patreon community member. And if you're not my Patreon community member, then you can join my Patreon community in order to get the daily analysis, the daily updates from Monday through Friday, and also these the stock market opportunities in the premium stocks of the US stock market. I have given the link in the description of the video and also in the comment section. And guys, yes, this just one more thing. And also guys, let me remind you that again, okay, I'm giving 40% returns in 1 year. Okay, and this offer is applicable until November 30th, Thursday, on a minimum capital of $500,000. Anything above $500,000, okay, this is applicable 40% returns in 1 year. and I've given the link to this program in the description of the video and also in the comment section. And guys, if you have any questions that you want to ask, then please feel free to ask your questions to the comment section, and hit like if you have liked this video, and subscribe to my YouTube channel if you have not yet subscribed to my YouTube channel, and hit the bell icon. So guys, this was my S&P 500 weekly technical analysis for the week of November 20th, that is from November 20th, which is Monday, through November 24th, that will be Friday.